Hi, everyone. Thank you for tuning in to the Illinois Small Business Development Center at Chinese Mutual Aid Association. We are so happy to and excited to share this valuable information on alternative funding to help grow your business. With over 250 registered small businesses here today, this webinar is being recorded for our clients' resource library and will be available later for viewing on our social media channels. The Illinois SBDC at CMAA brought to you through a cooperative agreement with the Illinois Department of Commerce and Economic Opportunity and the U.S. Small Business Administration. Through this partnership, the Illinois SBDC at CMAA provide one-on-one business advising at no cost to all registered clients. These services are offered in person or virtually and can range from assisting in accessing loans, grants, new business startup, growing your current businesses, sales and marketing, and much more. If you need further individual assistance, please sign up today to become our no-cost clients. We will be providing this information in the chat and at the end of our webinar. If you have any questions throughout the webinar, please enter in the Q&A below. All questions will be answered directly or discussed by each panelist during the Q&A session at the end of this webinar, or if each panelist has a few minutes after his or her presentation. We are delighted to welcome our panelists today from our partner organization. With us today, we have Alvin Rodriguez from Ally for Community Business, Hannah Fernandez from SCORE Chicago, and ROI Business Funding, and Mark Ferguson from the SBA Illinois District Office. Thank you for being with us. And with that, I will turn it over to Alvin to tell us more about alternative funding to help grow our business.
Good afternoon, everyone. Thank you, Cheta, for that great introduction. And all of you who are attending this event today, thank you for taking time from your day. My name is Alvin Rodriguez. I am a community lender here at Allies for Community Business. And for those of you who may not know who Ally for Community Business is, on our next page, I would love to share what our vision and our mission is. So our vision is that entrepreneurs from any background can start and grow businesses that create generational wealth for their families and their communities. And we do that through our mission, which is to provide the capital, the coaching, and the connections that entrepreneurs need to grow these great businesses to create these jobs and wealth in their communities. We do this as a CDFI. We are a community development financial institution that is a nonprofit. So we're not a bank, but we are a small business lender focusing strictly on what we call microloans in the microloan space. As far as our impact and just a kind of a little bit of information, what we've done over the last 2 years during this pandemic that we've all lived through. On the next slide, you'll be able to see the impact that we've had when it comes to not only our programs internally, but also the partnerships that we've created with governmental, municipal, local, and other organizations in providing almost $520 million in dispersed funds to business owners over the last 2 years, funding 24,000 individual community businesses, and also providing over 19,000 coaching sessions to businesses in our communities. So to say the least, we've been busy in, again, helping others provide these funds in addition to our internal and our personal, our programs, right? So when it comes to the capital and kind of what we do and what we're known for the most, as I mentioned, it's 3 C's: capital, coaching, and connections. On the next slide, we'll talk a little bit about our capital, which is the access to the loans that we offer. So Allies for Community Business, we offer loans between $500 up to $100,000, depending on the stage of the business, but we work with everybody from early or starting stage, emerging businesses, and established businesses, and we do it at fair prices in terms of our loans. But we also frequently manage grant programs, like I mentioned in the previous slide, with partners who share our mission to provide funds to business owners who will put those dollars to good use in their community. So we constantly and are always trying to update and have resources as far as what grant opportunities are available on our website, and partner with as many as we can, because we know that if a grant opportunity is available and a business owner is eligible for that grant opportunity, we always encourage the grants first, because who doesn't want free money? But when the grants aren't available, then again, you have us as a resource, as an alternative source of credit when traditional financing may not be an initial option. So if we go to the next page, I could talk a little bit about our loan process and kind of the loans that we do. So As mentioned, we worked with every stage, early, emerging, and established, from as little as $500 up to $100,000. The biggest thing is that we work with businesses in all of Illinois and all of Indiana. So if your business is located in Illinois, Indiana, we can help. And in addition to that, what makes us a little different, or a lot different than some of our partner organizations, is we do not use credit scores and do not put liens on your personal assets. Instead, what we do is we evaluate how well you manage your payments over the last 2 years and how much you have available in cash to take on loan payments with us on the now. Our terms and policies are pretty straightforward. We can approve loan requests in as little as 24 hours through our automated process. However, we often ask for follow-up questions. We often want to talk to the applicants, and there is some documentation that may need to collect it. So that may extend the process a little bit longer, but usually within 24 hours, we can determine what loan sizing or what opportunities we have with our applicants. In terms of our fair rates that I mentioned, all of our interest loans are currently at 3%, and that includes a 3% closing fee that is rolled into the loan, so you will not have to pay for that out of pocket, which is great. And our standard term is usually 24 months. There is a little room for adjustment there, depending if it's a loan or a line of credit, or if it's a larger loan for the type of business or industry or the need, that can potentially go up to 36 months, but standard term is 24 months with all of our programs. Now, just to kind of dive in a little bit more as to how we view applications and how we review them on the next slide, we'll kind of just show real quickly how the process starts. So if someone is interested in applying and is trying to get into the system and does the application, the first step is to run the credit report. So when we run the credit report, we initially try to qualify every applicant to see if they are pre-screened for a loan up to $25,000, as you see there on the screen. What we're looking for in the credit criteria when we're doing this is we're asking these couple of questions. For the past 24 months, have there been any bankruptcies or collections larger than $500 or any charge-offs larger than $500 on your credit report? Over the last 12 months, do you have at least one open trade line that you've been paying on for 12 months or more? And are the payments on time, or have there been late payments? And then at the time of the application, do you have 25% availability or greater on your open revolving lines? So what that means is on your open lines of credit, credit cards, or any revolving loans, do you have greater than 25% of those limits available to you, or are you almost maxed out on them? Once we review that information on the system, we then will determine if you qualify or you pass all these steps. The system will find what is the largest loan you're currently paying on that you've had for more than 12 months, and either the loan or the line of credit, and we take that amount multiplied by 1.5, and whatever that answer is, up to $25,000, the applicant will be pre-screened for. So an example, if you have a mortgage or you have an auto loan that's greater than $20,000 that you owe, then the system will automatically pre-qualify you up to that $25,000 mark based on just the credit factors alone. If you don't have any loans greater than $20,000, let's say, for instance, your largest loan is a $10,000 credit card, then we take that $10,000 balance, multiply it by 1.5, that will make you eligible for $15,000 loan. So our system kind of pre-screens and tries to qualify for these things initially right at the time of application. And based on what it finds, we can either move through to what's called step 1, which is what you're seeing there, or we may end up doing what's called a step 2 or step 3. So step 2 meaning, let's say you may have had 1 late payment or 2 late payments over the last 12 months, or maybe you don't have greater than 25% funds available. That's fine. It doesn't mean you don't qualify. What we'll then do is we'll do the step 2 process, where we'll actually ask you for a few bank documentation, specifically bank statements for the business and the personal, to try to review and understand what is your capability, or what is your capacity to take on new debt. If you see here, we have the breakdown of what's called DTI, debt to income ratio, debt service coverage. Again, all that information is very important to kind of understand, but we could talk about that more in detail later on, or in a meeting or on a one-off conversation. But the reason we have this on here is because this information that you're seeing on our presentation is also on our website, and you can actually read through it and understand how we would review and how we qualify applicants, so that you have a true understanding of what to expect before you even apply. So going back to the scenario, if you were pre-screened, but you may have missed one payment on time where you did not have that availability, we review your financials to understand if there is capacity to take on a new loan with us. And if there is, we will make that offer to you up to $25,000 using this scenario here. Now, we also understand that some of our business owners may have some bruises or what we call bruised credit or some credit challenges where they maybe have collections that are greater than $500, or maybe they've had 3 or more late payments over the last year. It doesn't mean, again, that you don't qualify. For those applicants, we try to help them with a program called our Credit Builder, which is step 3, which is a small loan from us up to $2,500 in order to try to establish not only credit with us, but also rebuild credit payments on the credit bureaus to kind of get you to the next step to become bankable again. Now, again, this scenarios here that I'm talking about is loan sizes up to $25,000, but we know that there's a need for folks to have greater access to greater cash amounts or greater loan amounts. So on the next screen, we'll talk about what we look at for loan sizes greater than $25,000. So from $25,000 up to $100,000. We're still using the same credit guidelines when it comes to our step 1 process, right? On-time payments for 12 months, no collections, no charge-offs, and also availability of 25% or more. But for loan sizes of $25,000 up to $100,000, we also do require that the business owner have 3 years of business financials. It is a requirement as far as the documents that we collect. So in other words, the business has to have been established for 3 years or more in order to do a loan size greater than $25,000. So it's very important that those that are listening in today, if you are a startup businesses or have less than 3 years of business financials, through our process, the loan size will be capped at $25,000. However, if you've been in business greater than 3 years and you have a larger need, then there is capacity there. Of course, my panelists, my partners here today will talk about other loan sizing and other options that are available to you. Again, we are more the micro loans, the smaller loan sizes that we can help with to kind of inject capital for you. But again, that's what makes us different. That's what makes us unique, is that we have these options for these smaller loan sizes. Now, in addition to the capital, we also offer other resources, the other 2 C's, which is coaching and connection. So if we go to the next page, in terms of what else Allies for Community Business offers, we offer one-on-one coaching similar to what you're able to do at the SBDC at CMAA, which is learn how to grow the business, start the business, or stabilize the business. We offer group coachings through webinars like we're doing now, as well as internal group leadership, like the Neighborhood Entrepreneurship Lab, which is a incubator for business owners that are trying to strengthen and grow their businesses. On the next page, it kind of talks more in detail of how we review or help our early stage businesses with coaching, what we do for our emerging businesses, and then how we help our established businesses. And one of the most important things on there is planning for succession, right? So once you've been in your business for a long time and you're ready to either sell or leave that legacy to someone else, how to prepare and get yourself ready for that. So that is something that we can help you with here at Allies for Community Business. In terms of the connections, right, the additional resources on the next page, it talks about who we are and where we are. So we're located inside the hatchery here in East Garfield Park, which is a shared kitchen for food businesses. So you have that resource there for those that are in the food business that maybe are not able to obtain or not in a brick and mortar currently, and using a shared kitchen is an option. We're also what we call a Chicago Business Center. So we actually can help with the licensing process in terms of asking any frequently asked questions or getting you ready to apply for or renew your City of Chicago business license. And then we are also helping with the certifications for WBE, or Women-Owned Business Entrepreneurship, as well as MBE, Minority-Owned Business Entrepreneurs. So we have a team of specialists that will help with that as well. So again, the next 2 slides just talks about a little bit more about the connections and the resources available to our clients. Again, here it's talking about the hatchery itself, and again, you'll have access to this information. The following page will talk about the licensing aspect, the larger contracts to the certifications, and of course, everything that we offer here. If you go to the next page, all of these resources are at your fingertips through our website, a4cb.org. So you can always visit our website to learn more about our organization, learn more about our loan programs. If you want to schedule a session to talk to one of the lenders like myself and get more specific information regarding the loan process and if you would qualify and how much for, you can definitely schedule a meeting through our website. And also for the coaching, same thing. You can also schedule a meeting through the website there. So everything's at your fingertips. Our whole team is here and excited to help you. So with that, my part of the presentation is over. I know we have a few minutes for questions. I would love to answer any that I can. So Tommy, Cheta, it's up to you.
Hey, Elvin, thank you very much for your quick overview, a lot of energy and on time. Appreciate that. Do have a couple questions. Number one, does your program, does Allies for Community Business offer loans outside of Illinois, perhaps Indiana or Wisconsin? And number two, what happens if there was a discharge bankruptcy? Could they still qualify?
So the bankruptcy, I'll answer that question first. As long as the bankruptcy has been discharged, we are able to assist, right? We're not able to help if it's an active bankruptcy. So yes, discharge bankruptcies, we are still able to assist you. In terms of, can we help businesses outside of Illinois? Again, if your business is incorporated or you're operating in Illinois or in the state of Indiana, we are licensed to help you in those two states. Those are the two states that we work in. Unfortunately, if your business is located in, let's say, Wisconsin or Iowa, we would have to understand if the bit, again, how that relationship is, but there's room for questions there, right? But Illinois and Indiana residents and businesses are able to apply.
Great, Alvin, thank you very much. Next, I would like to introduce Hannah Fernandez from SCORE.
Awesome, thank you so much, Edgar. So thank you so much again, everybody, for being here. I'm Hannah Fernandez. I am the first woman chair of SCORE Chicago. I'm also the founder of RI Business Funding, and I'll cover really what's called the missing middle gap. This is if you as a business owner is looking for a loan that's too big for a nonprofit lender like Allies for Community Business, but too small for a big bank like Mark Ferguson's going to cover from the SBA. Next slide, please. So just to tell you a little bit about me, I came from corporate America. I worked for Pfizer for almost 8 years, but I'm a big believer in SCORE mentoring because as a business owner myself, I really believe in giving back because I received a lot of successful mentoring from SCORE Chicago. And, for my company, we've successfully funded over 300 businesses. Next slide. And so the agenda today, we're going to go over about why big banks won't lend to small businesses, reasons why businesses are rejected, what matters to lenders, and just the various funding options in the missing middle gap. And preparation is key, as we'll go over next. So inadequate access to capital continues to be one of the biggest challenges for many business owners across the country. So there's 32.5 million small businesses. Of that, 7 million do need funding, but they don't even apply because they are discouraged. And 10.5 million do apply, but they get declined. So in total, these are horrendous. 17.5 million do not get the funding that they need. And here's why in the next slide. So when you look at big banks, they consider small business loans too risky because one, many small business owners and businesses have fewer assets to provide as collateral. And also the transaction costs for banks are the same for a $100,000 loan versus $1 million loan. So the ROI return is not as profitable. Hence, we need to go ahead and really figure out a way to help businesses in the missing middle. Next, please. But the great news is there's many funding options there are. The first one I'll go over are the business credit cards. There's also business lines of credit if you are an established business with at least $800,000 in revenue. The business cards are great if you don't have revenues yet, but you will need a good credit. There's also something called the invoice or receivable factoring. And then there's an unsecured short-term business loan. Next. And one of the things that I really want to tell you is that preparation is key. So I commend you for being here. The key to getting approved is really know what lenders are looking for, as Alvin, went over in the other slide, because that way you know how to meet the requirements before you even apply. And once you know the types of funding available out there to apply for, you could go ahead and reverse engineer the whole small business funding process. And also, there's no guarantee, but you can increase the likelihood of getting approved. Next. Now, I want you to tell you is that to be persistent, and I know, Mark, you're a big believer like me in mindset. Imagine that if Howard Schultz gave up after being turned down by a bank 242 times, there would be no Starbucks. And the same story applies for Disney and also Harry Potter. So my message to you is keep going and start having conversations with Mark, with Edgar and Cheta, and also Alvin and me, so that we could go ahead and guide you and walk you through the process way before you even need it. Next slide, please. Now, remember, you're not alone. A lot of businesses do experience challenges, so don't get frustrated. Scores Help is here to help you. SBDC, the allies for community businesses, we're all working together to help you. And the most important thing is know exactly where you are so that we could help you get there. And a lot of business owners, they come to lenders and banks and they can't even answer how much capital they're looking for and what they're going to allocate those capital for. And remember, no matter how bleak your situation, no matter how embarrassing it is, you got to face it, because you got to think of your visit to the lender or banker as a doctor's visit. We've seen and heard it all. So don't be embarrassed. Don't lie to yourself or the lenders, because your underwriting equals your lab result. It's going to reveal all anyway. So it's really good to just be upfront with us so that we can go ahead and advocate for you. Next slide. Now, here are just some reasons why businesses are getting rejected, so you can go ahead and prepare. They either had bad credit or no credit, lack of collateral, weak cash flow, lack of preparation. So you guys are here, so you're taking the next step. Maybe it's not even personal. The loans that you're seeking may just be too small for some lenders and small big banks, but allies could help you. And some banks are just risk averse, and then I've seen some people get declined because they may have a criminal record, or they could be in a high risk or restricted industry, meaning it could be cannabis, where it's, a lot of lenders are not able to lend that yet until it's federally legal. Next slide. Now, before we even get started and I go over the requirements, make sure you set up the basics. You must have a physical business address, not your home address, because a lot of lenders look for that. And basic stuff, set up an LLC to really limit your liability. And that's also going to give you more credibility as well. Get your EIN number, a business phone number, and also a professional website and email address. Don't go ahead and say, my email address is hcg@gmail.com. Whatever your company is, get that email address. Set up a business bank account and run all your transactions there. A lot of business owners would come to us and they said, my gross revenues are $250,000, but I ran it through my personal bank account. As far as lenders are concerned, it never happens. So you make sure right from the get-go, do it right. Get a business bank account and run everything through there. And also you want to make sure you have proper licensing for your city, county, and state. I've seen some business owners actually get declined at the final portion of the underwriting process because they didn't check with the Secretary of State to make sure they're in good standing. So make sure you go ahead and do that as well. Next step. And so these are what matters to lenders. One, capital, right? What is your skin in the game? What's your down payment? Capacity is they want to make sure that you're able to repay back their loan, and also collateral. They want to make sure that if anything happens and you can't repay your loan, it's secured by either real estate, your accounts receivable, equipment. Character is really just your credit reports. And, most of the times now I see lenders also checking your social media profile. So you want to make sure that your reputation on social is also in the up and up. And conditions is, are there any certain laws that affects your industry? Is your industry growing or is it diminishing? And keep in mind that the stronger your business is in all these areas, the more funding options you'll have. Next slide. Now, are you fundable? Ideally, you want these three. You want cash flow, you want a good personal credit, and collateral. But we all know sometimes that's not the case. So if you answered yes to most of these questions, again, you may qualify for more options, but at least when you come to us, have at least one of these criteria if you don't have it all. Next slide. Now, the first one is a business credit card. This is a great option if you're a startup and you don't have any revenues yet. You could get approved for anywhere from $25,000 up to $250,000 in business credit cards. Typically, the interest rates for the first 6 to 12 months is 0%. And then after that, it varies from 4% to 17%, again, depending on your credit. And typically your monthly payment is about 1 to 2% of what you used. And a good rule of thumb is when you apply for a business credit card, you will get about 5 times the amount of your highest revolving credit card limit. So let's say you have a Visa credit card with a $10,000 limit, multiply that for 5, more than likely you'll get a $50,000 business credit card. Next slide. And so in order to qualify for this, you need a FICO score of at least 720 in each of the bureau. And when you look at your credit score, your debt to available credit ratio is 30% of that, meaning that if you have a $10,000 credit limit, most people don't know not to max that out. So if your credit card limit is $10,000, you want to make sure that your balance is only 30% or less. Your balance is 3,000 or less. Don't max it out, because when it goes over that 30%, it's actually going to hurt your credit. And most lenders also like to see about an 8-year credit history. And they want to make sure that you pay your payment on time. That's 35% of your FICO score. And also, you don't want to go ahead and do too many credit inquiries, because that's also going to negatively impact you. And they also want to go ahead and see that you're able to handle various types of credit. That's 10%, meaning that if you have, let's say, a credit card, if you have a business loan, that you're responsible in paying off those loans. Next slide. The second one, once you're more established and you have revenues, you could qualify for a business line of credit that works like a checks line of credit. Again, that's anywhere from $25,000 to $250,000. The interest for this is 6 to 15%. And again, it all depends on the strength of your business and personal credit. But most of the business owners, because you do need good credit to do this, most of their interest rates are less than 10%, and your monthly payment, it's either interest only or interest plus 2% on your outstanding balance. And one of the things that I want to point out is when you qualify for the business credit card or the checkbooks line of credit, this will not appear on your personal credit report. They will only report to commercial credit bureau. So this will allow you to really build your commercial credit profile. But they're going to need your personal FICO score to actually go ahead and see if you get approved. Next slide. And most of the companies that I see getting approved for the business lines of credit, their FICO score is at least in the 700s. And most of them already have revenues in the $800,000 mark or greater. Next slide. Another option is what's called the accounts receivable factoring. And just to give you an illustration of how that works is, let's say you're a company that sells t-shirts, and then Disney goes ahead and says, you know what, we're going to order $100,000 of those t-shirts. So you go to, and then let's say you don't have the collateral to meet that or fulfill that order. What you could do is go to a factoring company and say, hey, I got $100,000 of invoice from Disney. So what they'll do is they'll advance you anywhere from 70% to 90% of the value of that factor invoice. And so in this example, they're advancing 90% to the business owner. So from the $100,000, they'll give you an advance $90,000. They'll hold on to $10,000. What they'll do is that factor will call Disney and collect on that invoice for you. And once they go ahead and collect their payment, and it's typically about 2 to 2.5%, they'll go ahead and give you back the rest. So let's say their fees in this example is $2,500. They'll go ahead and give you back the $7,500. So that's how you could go ahead and also get financing if you have a lot of these invoices. Next slide. And the last example that I want to go ahead and give in our business funding option, and I would say this for last, but I want to tell you about it. This is what's called an unsecured short-term business loan. Unsecured just means that, you don't have to go ahead and put up any collateral. No one's going to take away your house or your car, anything like that. So you could get anywhere from $5,000 up to $2 million business loan. This is short-term. So this is only 3 to 18 months term. And the fixed cost of capital is pretty high. It's 10 to 30%. And that's why I would only advise this for business owners if it actually makes sense, because they're going to go ahead and take out, the payments either daily or weekly. And that's one of the reasons why you have to make sure that you do your numbers and it has to make sense. So one of the companies that I helped out, it's a construction company where they got a big contract of, $5 million from the city, and they also have one from the state, but they're not getting paid until 3 or 5 months from now. And even when they accounted the fixed cost of capital, they still had a pretty good profit margin. And that's the only way that I would actually suggest this option, but I want y'all to know about it. Next slide. And so to qualify for the short-term business loans, you have to be in business for at least 3 months, ideally 1 or more years. Your gross revenues have to be at least $100,000. Your FICO score can be challenged. Again, the weight is on your revenues for this one. You must have business banking, otherwise this is not an option for you. At minimum, you need at least $10,000 per month in deposits. And the lenders also want to make sure you have at least 4 deposits per month, because that means that you're getting a deposit from at least 4 different clients. And so because if you only have 1 client, then lenders see as risky. Next slide. And this is an example of what I mean by risky, right? I had a client and she has a home healthcare business. And so at first she said, you know what, Hannah, I have $1.2 million in revenue per year. And I was like, fantastic. And she's like, I need some funding for equipment, $100,000. And so when I actually looked at her business bank accounts, she only had one client. You know, yes, she was making, you know, $1.2 million per year gross revenues, but lenders see her as risky because she only had 1 Medicare client. The only reason why she actually got funding of $120,000 is her client was Medicare. So people know that, and the lenders know that the government will pay her back. So the bottom line is, a big misconception for small business owners is they said, if I only get the funding that I need, then my problems would be over. That is not the case at all. You cannot skip business fundamentals. In fact, if you get funding, you better make sure that you drive more sales, because now you owe somebody money, right? So you got to make sure you better see a SCORE mentor. You better see, you know, someone who could actually say, hey, I got this funding, and what do I do to properly allocate these funds so I get a return on it? Next slide. And so in all of this, you know, and I'm wrapping up here, you got to know your numbers. Before you go see allies for community business, before you see banks, make sure you go see some mentors first. And, you know, you need to be able to answer, you know, what are your annual gross revenues? How much capital do you need? You'd be surprised when businesses come to us and you ask them that, they're like, oh, I don't know, $500,000, $1 million. You know, you got to know these. And what do you need the financing for? What are you going to allocate those funds? Is it for inventory? What is it? And how will these funds impact your business, right? Next slide. And so these are all the questions that you need to consider before seeing any one of the lenders. Is what is the current financial shape of your business? For the past 12 months, what are your gross revenues? How long have you been in business? How much capital do you need? What do you need the money for? How much collateral, if any, do you have? How quickly do you need the money? Was it yesterday, or do we still have time? Do we still have time to help you? You don't need it until 3 months from now. You know, how long would it take to pay you back? And how will these funds impact your business, and what is your return? And next slide. And the last slide really is connect with all of us. Connect with the SBDC, connect with Allies for Community Business, connect with the SBA and SCORE, because the best time to look for capital is when you don't need it at that point. So make sure you get the coaching ahead of time to improve your likelihood of getting funding, so that when the need arises, you're prepared. And you could go ahead and reach out to us at chicago.score.org or roibusinessfunding.com. Thank you so much.
Hannah, thank you very much for a great presentation. And one of the questions that came up is really at the end, you were really talking about reviewing business planning, understanding needs, and what you can use the money for. Mm-hmm. Did have a couple of questions. Is a business plan ever part of the consideration for your lenders versus as an SBA lender or even at Allies?
Not as much for the alternative lending options. What they really care about is that your financials are in order. So you got to make sure that you have your profit and loss statements, your balance sheets, your bank statements. But, you know, I know that, and I'm sure Mark will go over this. I mean, it's good to have a plan, because even when you get an alternative funding, you want to make sure that you're allocating it to in the proper way.
All right, thanks, Hannah. And then this is a follow-up. Is there an email that people can contact you with? There was a comment about wanting follow-up from some coaches or mentors they've initiated at SCORE.
Absolutely. So our email address at SCORE is ch.admin004@scorevolunteer.org. I'll go ahead and also enter that email to make it easier for everybody on chat.
All right. Thanks so much, Hannah. And next
welcome.
we have, thanks, Hannah. So next we have Mark Ferguson with SBA. Off to you, Mark.
All right, thanks, Ed. Good afternoon, everyone. On behalf of Administrator Guzman, our Regional Administrator, Jerry Agapai, and of course, my boss, DD, Bo Steiner. Thank you for having us on. And I just want to say that Elvin and Hannah, great job. Great job. You know, you made my job real easy. Not much for me to talk about. So with that being said, why don't we go on to the next slide, Tommy? And yeah, everybody wants money, right? Go on to the next slide. Let's talk about the money. Now, you know, we kind of discussed a little bit of everything here. You got SBA-backed loans, private investors, R&D award funds, surety bonds. But let me just talk about some of the programs that we have available. If you go to the next slide, Tommy, please. You know, we're going to work with everyone. We work with our micro lenders. We've given money to Axion and allies for community businesses. Let me make something very clear. The United States Small Business Administration, not association, you can't join us, okay? We're probably the biggest economic development program on the, or biggest gorilla on the block. So we're going all the states, all the commonwealths, all the territories. So that's where we put our reach. Now, what makes us uniquely different, like Elvin and Hannah have put forward to you, they are actually making the loans. What makes us tick more so than ever is what we call SBA financed backed loans. What that means is that we put a credit enhancement on, I apologize. We are in the process of moving. Hannah, if you saw your office for SCORE, it ain't there no more. God. So I'm in my office and I have contractors. So if you hear bumps and things like that, I do apologize, but you know, this is part of being a project manager. But at any rate, I was talking about our SBA backed loans are backed by credit enhancements from the United States Small Business Administration. And what we do, as Hannah had mentioned, you know, a lot of bankers, you know, we go to the banks and we say, hey, we're ready. You know, we're ready to go get this money and this and that. And they say, well, you're a startup. We don't really do startups. Or your technology, you know, today's technology is tomorrow's junk. You don't have a lot of collateral. Or, you know, your loan amount is too small for us to even make so much money. Okay, I can't make money on $5,000. Okay, or you know, you just can't pay them back in the agreed upon repayment terms. Well, with the 504 back loans, what we do for the banks is we'll say, okay, look here, we're going to shoot a loan over there to Edgar. He's going to borrow $1 million. We're going to put a 75% guarantee on it for the first bank of Cheddar. So Cheddar's like, okay, I think I'll take a risk on Edgar. You know, he's kind of like, you know, but nonetheless, I'll take a risk on him because I know the government is going to back me in the event of the default and refund me 75 cents on a dollar. So in the real banking world, instead of a bank of Cheddar being on the hook for $1 million, he's only on the hook for $250,000, which also means he can lend 3 more $250,000 loans to many of you small businesses in the community. So we all rise to the top, okay? So that's one of the premises of the SBA backed loans. Now, if you go to the, we do have competitive rates and flexible overhead requirements. I need to say this. Now, Hannah knows that I'm big on planning, okay? I'm huge on planning. Predetermine your course of action, lay out your goals and objectives, adjust your priorities, and do your daily review, you know, or notify key personnel. And if you plan ahead, go and acknowledge everybody got it, head in action, expect delays, acknowledge good things, and do a daily review. So get it, it's plan ahead. See, without a plan, you're going to find yourself walking through this wonderful life called the business world, small business community. And if you're not aware, you will become aware when you get blindsided. Somebody hits you in your head and you have to react. If you plan ahead, you respond. Therefore, you can go after these things. There's another thing that both Elvin and Hannah, you can go to the next page, Tommy. Hannah hit on that I like to talk about too with you is that when you plan ahead, you know that you have to have the uniform on. What I mean by that, when is the last time you saw a naked baseball player? When was the last time you saw a basketball player running around in a jock strap? It doesn't happen. You have to put on your uniform to get in the game. If you don't have your uniform to play, then you're not going to get in the game. What does that mean? That you have to do the things unsuccessful people hate to do. What are those things? That little bit of extra hard work. That means you got to have a plan. You got to know your financial numbers. We know we just went through a pandemic, and we know some of the horror stories with some of the SBA lending policies that we had with some of our loans, but we always hear the horror stories, but we didn't talk about the 351 billion people who got money. 400 million people got, or 4 million people got $351 billion to be a success, okay? But they had their act together. They knew what a balance sheet was. They knew what a profit and loss statement was. They knew what their break even was. If you're a startup, they knew what they wanted to project out and what those projections would look like. So with that being said, we're here to launch and grow and start up your business. You can do lines of credit with us. You can do purchase inventory. Man, you can purchase land and real estate. You can export products, not import, I said export. Go to the next slide for me, Tommy, would you please? Now, what do you need to do that? You need to do your homework. You need your business plan, your expense sheets, your financial statements, and know your financial projections. I've been lending money for 40 plus years. Yeah, I'm 64. So I've been around the block a little bit. But with that being said, if you come into my office as a banker and I ask you and I say, okay, Edgar, you know, I don't understand why you're taking this big hit in your cash flow statement. Can you explain that to him? And he says, no, I got to go check with Tommy. He's my accountant. Well, you know, you're out of here because I'm not making a loan to Tommy. I'm making it to you, my man. So you have to do the things that unsuccessful people hate to do. Next slide. So as we go through this, we have one program, okay? Well, let me just say this real quickly. If you can imagine an umbrella, and you know little spokes on the umbrella, everything emanates from the 7A loan guarantee program. So everything I'm going to mention to you, whether it's an express loan, a $5 million line of credit, a $5 million term loan, a 504 real estate loan, all of those things. We can lend money or back or guarantee money from $500,000 to $5 million. So for all you big ballers out there that really want to do something in the community, put up a factory, can I do it? Yes, I can do it. Can I fund you with your loan, your line of credit for your accounts receivable? Yeah, I can do that. Can I help you flip houses under our builder's line of credit? If you're in the real estate game, you want to flip houses and you get rid of it within 18 months, I can help you with that. So with that being said, we have what we call a lender match. That's our latest thing, because what happens is that you guys come to me and say, hey, Mark, who are the best banks? Well, I can't endorse a bank. That's against the law. But we had this lenders match where if you put in all the necessary information, within 2 days, lenders who are participating in that, they will go ahead and say, hey, we like what you have to say. Why don't we get together and apply for a loan? It could be a 7A loan for a term. It could be for a line of credit. Now with 7A loans, I want you guys to listen to me here when I say this. Most commercial banks will do working capital loans for 3 years, maybe 5 if you're lucky. We'll do it for 10. Most commercial banks will do real estate loans on a 5-year call with a 15-year amortization, meaning every 5 years, you'll have a sword of Damocles hanging over your head, saying whether is or you ain't my baby, so to speak, and trying to renegotiate every 5 years. We'll do a real estate loan for you for 25 years, fixed, at a very, very competitive rate. You can't beat that. I dare you. Come on back. Come on, I dare you. I dare you. I dare you to beat me with that rate. Okay. So with that being said, you should look at the 504 loan program for heavy assets. The 504 loan program is technically a economic development loan, wherefore the bank would come in, and it's one of our unguaranteed programs. So I'm skipping a little bit, but I wanted to tell you about this 504 because it's a good program. The bank takes out, the Bank of Chettle take out 50%. Me, the SBA, through a CDC, will go ahead and take out 40% through a debenture. You, my friend, the borrower, comes up with 10%. When's the last time you ever bought commercial property with 10% down? That's right. You know it. You know it. Doesn't happen. Okay. Can we go to the next slide? With that being said, so you're looking primarily at heavy assets, machinery, equipment, and real estate for that 504 loan. As I told you before, our terms are longer, 3%, 3 years for working capital loan. For commercial bank will take you 10 years. Leasehold improvements, machinery, equipment will take you 10 to 15 years. Real estate will take you out to 25 years. Our interest rates are negotiable. Most people will come back and say, well, Mark, the bank said I gotta get charged 2.25% interest over prime, or I gotta get charged 2.75% interest over prime. Not true, not true. That is the maximum. We tell the banks you cannot go over that. You got to stay within that parameter. So if you have a loan that's 7 years or less, your maximum spread from prime would be 2.25%. If it's 7 years or more, then it's 2.75%. Everybody with me? Just kind of nod your head. Okay. All right. So with that being said, you know, you can't get a 504 loan, nor can you qualify for a 7A loan unless you have your homework done. And Hannah mentioned it. It was in her presentation. She said this little thing called the 5 C's of credit. We live by that. We live by that. But where does the SBA come in if you have a shortfall? If you don't have enough collateral, I'm guaranteeing 75% of your loan. That's a lot of money. Okay, so that kind of, you know, shakes things up a little bit. How about your cash flow? If your cash flow isn't as sufficient as the bank wants it, again, I'm guaranteeing your loan at least 75 cents on the dollar. What I can help you with, I can't help you really with your character. Only you can help yourselves with your character. As a man of faith and as a man who knows secular faith, fairness, accountability, integrity, transparency, and honesty. That's what all we lenders want to see in you and your character. You know, character is something that is observed of you when you think nobody's watching. So you need to have your character in place. Can we go to the next slide, Tommy, please? So with regard to our funding, I don't want to get into, just stay there for a second before I get on the debt side, I mean, on the equity side, but with the debt, we had 7A loan program. I got a wonderful cap line program, like lines of credit up to $5 million. Like I mentioned to you before, there's that builder's line of credit. Man, that is a remarkable line of credit up to $5 million where you can buy and sell property, whether improve it or build it from the ground up, commercial, residential, or mixed use. As long as you sell it in 18 months, everything is peachy keen with us, okay? We got your regular accounts receivable lines of credit. Those lines of credit are so fantastic that we can do long range type planning. You know, there's another thing I didn't really speak on, and that was many of you may want to get into the export business. Remember I talked about exporting, not importing, exporting? We have a wonderful exporting program. We have the international trade program, okay? Under the international trade loan program, we will go ahead and do capital intensive type assets. It's similar to the 504, but it's SBA backed. It's got a guarantee with it. And we will go ahead and do like real estate, factories, things of that nature. I need it here in the United States, okay? You can't be abroad anywhere, but it has to be here. We have what we call the EWCP, or export working capital line, where you can go ahead and use that line to facilitate your products from going from the United States to wherever and making sure that your payments cross, whether it's with a line of credit or a standby letter of credit. And then we have just a traditional term loan for export. Now, what's great about the export? Export is the flavor of the month, so to speak. So that guarantee comes with a 90% guarantee. Not 75, 90% guarantee. So that makes it even a little bit more palatable for the banks, okay? So with that being said, we've talked about the 504, we've talked about basic 7A. Remember, like I said, if you go to www.sba.gov and look up financing your business, you're gonna say, oh, wow, Mark was not lying to us. Look at this. All these little 7A derivatives on this umbrella, on these spokes. Now that's up to you as a entrepreneur, as a leader who has shown that you have the ability to listen, evaluate, advise, and direct. That's you. You lead. That is your ability. But when you take on leadership, now you're taking on a responsibility, because now you're making decisions for the whole, like all your employees in your company. With that being said, we have funding with private investors. We have SBICs. That's our VCs. Right. That is our venture capitalists. If you aren't ready for them, you don't want to go. Go to the next slide for me, Tommy, if you could. You know, and the reason why I say that, you have to have your stuff. I's need to be dotted, T's need to be crossed, because these guys, they're looking for EBITDA, EBITDA, greater than 25%. You know what that means? That means earnings before interest, taxes, depreciation, and amortization. All the little add backs we as underwriters kind of use to push back your income, make it go up, so you had a cash flow so we can give you the loan. They're not playing that game. These guys are for real. They will also get in your business. So with that being said, they got the connections, they have the expertise, and they will go ahead and invest with you. And with the particular SBIC here, we fund many of the SBICs, so we also share that burden. You've probably seen that with Federal Express, Dell Computer, just to name a few. You know, these are now household names. Can we go to the next slide, please? Need for funding for R&D. We do that too. We do that through our innovation research program and our technology transfer program. We're always looking for good ideas, always. Don't believe me, ask Intel. Yep, next slide. And with that program too, as you know, those are federal grants, and we participate along with 11 different agencies to do that sort of thing. But that just gives you an idea of what they're looking for. Water filtration, wearable technology. I'm trying to figure that one out. I'm a little bit old school. You know, if you mean wearable technology and I have my iPhone in my pocket, then I guess it is wearable, but I'm sure they mean something totally different. Clean energy, artificial intelligence. How many of you are done talking with machines? I am. I get tired of talking to machines. Hello, Mr. Ferguson, how are you? Do I know you? You know, can we go to the next slide? Needs to be bonding and bidding. Okay, let me tell you. Once upon a time, we had what we call 3 C's. I'm not supposed to say this, but I'm gonna say it anyway. That's counseling, capital access, and contracting. Counseling you will get from our funded resource partners like Cheta at CMAA. and above all, with SCORE, with Hannah and her mentorship. They help us. They will tell you that, yeah, Mark and those guys, they're big and they're kind of like, got a lot of expertise, but there's not a whole lot of us to go around the state. So I depend on the Small Business Development Center Network, as well as all the SCORE chapters, okay? And I'm glad to say that I'm proud of both my Small Business Development Network and the services that Chetta's bringing to the community, as well as Hannah turning around the Chicago SCORE chapter and making it what it is today. So we're doing fine in that instance. The other was the capital access, which we're talking about. But this one here with the surety bonding is that if you want to go ahead and grow and expand your business and you want to do it through federal contracting, we have a special program called the 8A Business Development Program. And you can do that and become a member of that. And we will have a business opportunity specialist assigned to you to help you go after federal contracts. In addition to what some of the SBDCs house, like procurement technical assistance providers, in addition to ITCs, International Trade Centers, that are also normally housed at the SBDC centers. So from a counseling perspective, when I tell you planning is important, you need to see Chetta, you need to see Hannah.
Hey, Mark, as we progress through this, I know we have a couple minutes left. I was curious if there's other slides you want to share. So
No, I guess we're kind of just flip real quick, you know, because I can talk forever as a minister. We talked about trade exporting, go, can help you go global. Yeah, you know, disasters. We just went through one, so everybody's pretty familiar with disasters. Okay, and keep going. Okay,
super.
I'm good with it because you know what? This is the best part of the whole, you know, I'm about to say best part of the sermon. The best part of the presentation is the questions. I love the questions and let them rip. Let them rip.
Sure. Yeah, Mark, there are a few questions that came in. One of them is, can these loans be paid early? Can you pay these off early as you would a house mortgage?
Yes, sir. There's no prepayment penalty. We may have a prepayment penalty on one of our oddball type products. When I say oddball products, it's one of those products that it's not in everyday use, but there technically is no prepayment penalty with any of our loans.
Okay, and then would thank you. And then would an SBA lender, such as any of the bank partners that you have, are they able to handle all of these credit lines, or does the lend match tool that you have differentiate between programs and the SBA offers?
The lender match program will differentiate the banks with their preferred loan product. Like, for example, American, I'm trying to think of American National. I know I don't know which American it is, but they love doing international trade loans. So that's up to you, Edgar, as the individual borrower, to try to make that match on what your needs are with the bank's needs, okay? But that lender match eliminates a lot of that because the folks that want to do business with you, they'll come and talk with you.
Thanks, Mark. And I just wanted to offer a similar question about Hannah and Alvin. We'll go with Hannah first. Hannah, with any of your products that you spoke about, are there any prepayment penalties?
No.
None of them. And then how about with Allies there, Alvin?
I'll give you the longer answer. No, we do not have prepayment.
Wonderful. Let me offer this up then to our attendees, which we're very grateful here, as well as those who will be seeing this recording later. Any other questions that we have open to the panel? I'm looking at the Q&A.
How many of you want money? Everybody wants some money, right?
I do have a question, Mark. Dante Hamilton stated he received a PPP loan, the EIDL loan, and the EIDL loan increase for his business. Will this be helpful in helping qualify for a 504?
Yes. You know why? Because you've already established a record with us at SBA. You've shown that you're credit worthy. You've shown that, we just don't, I mean, we were a little bit lenient, but we still use the 5 C's of credit to an extent. So yes.
Great. Thank you, Mark. And that's something I did want to share. I did speak with an SBA banker They said the most critical thing, especially for a new business, that's when the business plan is more important. But businesses who've been around for about 2 to 3 years, that's where your credit worthiness ties in. And it hits on the point that both Alvin, Mark, and Hannah have shared on. Let's see what else. And you got a solid compliment there, Mark. Dante, appreciated your enthusiasm. And then how can SBA help with becoming a minority-owned business? Are the SBA, I guess it's a MBE, Minority Business Enterprise? Is
Yeah,
that
but
a score?
that doesn't come from us. Your 8A certification comes from us. Okay, every federal branch of the government and or every branch of the government, whether it's the state, the county, or us, we all have our own accreditations. So, you know, you get a lot of, believe, Hannah, you can help me. MBE is usually coming out the city.
Yes, the city.
DBE is coming from transportation companies, but your 8A certification, you know, that mega contract, $5-10 million with, you know, 5, you know, $2 million options with it, you know, that comes from us. And that's through the 8A program or the general contracting program.
Yeah, for MBE certifications, they could get assistance from the City of Chicago Business Affairs and Consumer Protection. There's also the state of Illinois, and there's an organization also called the Chicago Minority Supplier Development Council, and they could all help you with getting certified.
Great, thanks, Hannah. And you as well, Alvin? Anything to share there? Getting a certification, which includes WBE or veteran-owned business certifications?
So as I shared in the presentation, which I believe everybody will have access to at the end, yes, we do have a coach, one of our coaches on staff does focus primarily on WBE, Women Business Enterprise, as well as MB, Minority Business Enterprise. So we are able to help in getting folks prepared for that certification and then taking them to the next steps. So yeah, we can definitely help you with all the prep work because those of us that are in the know that it is a very arduous process, but we can give you some guidance and get into that point.
All right, thanks,
Hey,
Alvin and Hannah and Mark. Go ahead, Mark.
I was just gonna say too, you brought up veterans.
Yes.
You know, I'm partial to the SBDC network because I'm the project officer over all 42 locations. But with that being said, we had the WBC network, which is one is out in Aurora, one's here in Chicago. And we have the VBOC, which is located up in Wisconsin, but we are always looking to work with veterans also. You know, anybody, listen, you know, if you have been traditionally left out of the process, I can tell you wholeheartedly, professionally and personally, I've devoted my life to trying to develop other people to be the very best that they can be. And if I can show you how to be the best you can be in business, then that's what we're going to do. That's why I've never worked a day in my life, because I'm doing exactly what I want to do, is helping everybody be successful. And looking at you, Edgar and Hannah and Alvin and Tommy and Chetta, you know, I want to leave you guys a legacy and say that's the way it's supposed to be done.
Thank you so much, Mark. And thank you to Dan in the chat. You put some information about getting a DBE for IDOT. I would offer that our attendees also look at that. Well, I'd like to hand this back to Chetta as you close us out, and thank everyone for being part of this.
The bank of Chetta. The bank
Yes,
of
the bank of
Chetta.
Thank you, everybody that joined us today. And we are, as Hannah and Alvin said and Mark said, we all work together and we are here to support you. I had myself become an entrepreneur back 23 years ago, set up my own company and run my own business. I later sold my company and now volunteering and helping and working for the SBDC now. And we all would be able to help you. Any questions that you have, all of us, just reach out to one of us. We will be able to partner together and help everybody. So just, again, appreciate your time spending with us and look forward to our next webinars coming up. Please keep posted and, thank you.
Everyone.
Thanks, everyone.
All right.
Thank
Thank you for having me on. All right.
Bye.
Happy St.
I'll see you guys. Bye-bye.
Bye.